These are big banks, and these earnings are very important. And they tell us a lot about the economy too, don't they? Because when one of the big problems for the banks is they've got a weak economy, and corporates and households aren't borrowing. There's uncertainty over policy. There's so much going on, and as you note, they're having net interest margin challenges. They've had a big slowdown in earnings in the first half. How does it look now, and is it going to stay this way as long as the economy is weak?
I'm afraid that in terms of the margins outlook, there is still going to be some pressure in the next couple of quarters. Partly that's reflecting lagged impact from the earlier rate cuts, and also broad expectations that banks are still expected to lower borrowing costs in order to support the economic recovery. And that against a backdrop of fairly weak loan demand, especially on the retail front, would mean that a lot of the lending will be driven by corporate infrastructure, public housing related, that sort of lower yielding loans. And against that, with the lingering domestic property stress, we do expect impairment charges will remain quite elevated. So against that backdrop, the earnings outlook is still going to be somewhat suppressed. If we also considered the pandemic restriction that's having an impact in terms of constraining business as well as consumption.
Well, let me look at this issue. You note in some of your research that banks have to be resolving existing non-performing loans at the same time as they're recognizing new non-performing loans, right? It's quite a vicious circle rather than a good one. And you note that it's especially still related to property developer loans. And in Xi Jinping's big speech, he didn't say much about property developers and how that would fit into his upcoming plans. How bad is the problem now, and how big is the problem for the banks?
In terms of the bank's direct lending exposure to property developers, that remained quite manageable at about 6 to 7% for the sector overall. But it is the implications in terms of how long a property market recovery will take and what impact that has on home buyer confidence. Because at the moment there are still concerns around home completion. The policy measures have tried to address these factors. So in terms of bank impairment loans, they will still be recognizing some NPLs with regards to the housing sector. But the longer term issue is how do you restore home buyer confidence in the market?